welcome to today's edition of 600 Seconds of Trading. It's Monday, December 4th, 2017, and it's about 9:05 a.m. in London when I'm doing this presentation. Over the next 600 seconds, I'm going to provide you guys with a quick update on markets such as the Eurodollar, Bitcoin, crude oil, gold, and the DAX 30. We're also going to take a look at the Trade Captain economic calendar to see if there's anything coming up in today's trading session. Before we begin, though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a general risk that we'll lose more than our invested money. The reason for that is because a lot of people trade with leverage, if you're trading CFDs or if you're trading Forex, and because of that, there's a risk that we actually lose more than we deposited with our broker. So please bear that in mind, and do click here on risk disclosure if you're unfamiliar with any of this before you keep on watching. Okay, so let's begin. Let's waste no time, and we'll begin with the Euro versus the USD. Let me just change here. There we go. So this is the Euro versus the USD, and a few days ago we said the market could bounce from these levels. Was 1850 and then moved to the upside. And then I said the traders that are not already long, or traders that just book profits, so therefore not in the market any longer, they're probably going to wait for a decline maybe to 1868. From these levels, I suspect the market is going to bounce. And we did push to this level, and then we quickly bounced back up to the actual highs again for a nice little bounce of about 70 pip. And since then, as the new week started, the price has pushed back to the lows again. And around these levels where the price bounced last time, I suspect traders are going to look to go long again, and then we could potentially target the high and maybe take out the 1961 level. If we do take out the 1961 level, then this market could reach 120, which is a level here, a high actually from the 22nd of September. On the other hand, if the market takes out the 1797 level, which is a level just below Thursday's low here, then I suspect that we could have a break to the downside. Because usually when you take out one low, then the price is going to target the next low, which happens to be 1710, which is the November 21st low. So this is my outlook for the euro. So I remain bullish. I suspect traders can go long here, and that's targeting these highs. And if we take out the 1961 level, then we could potentially reach 120. On the other hand, take out the low, and we can go down. Here's the price of Bitcoin. And these analysis, like if you trade with technical analysis, then you're just gonna love the cryptocurrencies. Like, it's not like trading the euro many times where it goes up. Like, I'm quite good with the euro, but it's still sometimes you find it a little bit problematic. And if you ever traded the pound, then you know what a problematic currency pair is. But these cryptocurrencies, they're like heaven sent. They bounce exactly from support levels, but the outlook for last week was like no change to this. Last week we said go long at 93.54. Well, actually I said the traders might go long there, and I think that's where they're gonna bounce. And obviously I've done this for quite some time now, but just because I've done it for a long time doesn't mean actually it's gonna work out every time. But it did work out perfectly here. It bounced from 93.54. We touched the highs and then continued to move up higher. You might also remember that not too long time ago we said look to go along here and for this to head up. And here as well we had like minimal push below the buy zone until the market bounced. So trading breakouts, buying dips, because it's a trending market, reminds me a lot when the Eurodollar in 2014 was just moving to the downside. In the Eurodollar here, when I was trading this part, I made about 127% that year. So back to Bitcoins. So what's the outlook here? So Bitcoin, we can get rid of all these lines now, like that, clean that up, and then support is down here at 59.25, 89.25, sorry, and the market tried to move up and then sold off. This could easily just continue to drift up higher as it usually does, but this is not the time to go long. The time to go long is long gone. It was down here. So fib from the low to the high gives you, this is the 50%, so I suspect it could easily move back to the 50% level. In fact, I think it could, if it does go down to these levels, it's gonna take out this, and then the people that are long here are gonna be under pressure, and then they're gonna be stressed really. So they're gonna cause this market to push further down. So I think from this level here, it makes perfect sense, which is the let me see. I don't know if it's my computer mouse or just trading view charts that are not perfect. Today obviously was my fault. I managed to click on, you have 1, 2, 3, they all look the same, and I chose the wrong one. 10,248, I'm bullish from that level, could bounce here, push to the upside. Here's crude oil. Here as well, we did really good, really good. You might remember the market was going down last week, and we said look to go along here. Said look to book profits up here. Spot on, hit that perfectly. So hope you got out there. And now we're pushing back to support. And from 57 to 72, which is the level we almost touched this morning, and I think it can continue to go down a bit lower. If it touched 57.20, wouldn't surprise me a bit. But from this level, I'm bullish again. I think that's going to give traders the opportunity to reload on long positions. So let's, actually, we're not going to say this chart, but from 57 to 72, I'm bullish. I think you can go up to the highs again. So there's no real reason to change the outlook as down straight above these double bottoms. Take out the double bottoms, and we could potentially move down to the next support level, which is this low here, created on November 20th. Now here's the price of gold. Gold has not been nice to us. My outlook for this market has been rubbish lately, and it's just because the market is giving me these false moves. Like it pushed up strongly here on the November 17th, and I turned bullish, but then the whole market came down tumbling. And then I said here, if you wanted to, you could look to go along here. I said as well, it wasn't really what I wanted to do or trade, but maybe the market would bounce here. Now the market here didn't bottom out where I thought it would do. It just continued to move down lower, and right now I'm just gonna watch 1263. So I'm bearish on a break to the downside, and 1299 I'm gonna be bullish on a break to the upside. Until we actually breach this range, there's really no reason to get involved. And here's the DAX 30. Now the DAX 30, I think it's just I mean it pushed to the downside, right? You might remember it was bullish. It took out this level here, and because of that, it turned neutral. Presses back now to the middle of the range, and we're dealing with some sort of a downtrend with a high here and another high here, and take out 13,200, and then this market could head to the upside. Until that happens, let's just lay low. Let's just see what happens, and if we take out the high here in the next few days, then I guess that is the Christmas rally that we'll usually have. And that concludes the first part of today's presentation. So good morning, John, and good morning, Simon. Thank you so much for joining me today. It's always good to have people in the chat box. I hope you're doing good, and thank you so much for watching. What we'll do next, we're just going to take a look at the economic calendar. So let me just load that. And as well, so you know, I'm gonna be in China next week, or this week. So this webinar, we won't do it on Thursday or Friday. And also I'm not gonna be here on Monday, December 11th, just because I'm gonna be in China for an event with Trade Captain. Economic data to pay attention to today. I guess the only thing that could potentially move the market a bit is in 5 hours, 5.5 hours from now, the New York ISM New York Index. If you are interested in market moving events, then on Tuesday you have the RBA rate meeting, but that's in the middle of the night, so I'm usually in bed at that time. But on the 5th at 3 o'clock, you actually have the ISM non-manufacturing index. So I'm going to do a live webinar for that, and we're going to cover the market as this happens. So the actual event, the data is out at 3 o'clock, but we're going to start 15 minutes before to provide you guys an overview of what the data is about and see if there's any interesting setups. We're going to do the same on the 6th of December, not with the Bank of Canada rate meeting, but with the ADP report, which is out at 13:15. The reason for skipping something like this that does move the market a lot is that here is more about what they said versus what they didn't say. It's much more difficult to actually work out a trade around these events. However, the ADP number is very straightforward. The anticipated outcome is 214,000. If it's stronger than that, people buy the dollar. If it's lower than that, people sell the dollar. If you can combine that with some nice technical analysis, then it's very, very straightforward. So here's a very simple, just click here, or you click on education, and then you click on webinars, you'll see the same information. And here, you just need to sign in. You have first name, last name, phone number, email, country, and then you're done. Then you logged in, and in fact, by doing so, you'll be a member of the premium section of TradeCaptain.com, and that gives you access to the seminars and webinars. And if you download a demo with the same email that you used to register for Premium Captain, you will have access to our quarterly outlooks and some nice premium educational videos. As an example, you'll find my presentation I did in Singapore a few months ago. That's short-term scalping. You'll also find a video about Elliott wave trading, and you'll also find a video about trading psychology. So you can have access to that with a demo account. Okay, guys, we're gonna finish. I want to thank you so much for joining me. Don't forget to retweet messages like these, and don't forget to subscribe as well on YouTube, because it's very straightforward. The more people we see watching this video, the more resources we allocate to it. So right now we're doing it Monday to Friday, and so far it's looking good. So I want to thank you so much for your support, but let's help out all together to make it even bigger and bigger. Thank you guys, and I'll see you guys tomorrow at 9 a.m. London time. Have a great day. Thank you.